Thanks for watching this quick video and update on one of the most traded pair in the Forex market, and it is US dollar to Japanese yen. First of all, as we can see, there is a little bit of the technical analysis that I already done, and as we can see, I've just chosen 2 hours candlestick because from my personal point of view, it represents perfectly that those prices are moving in a sideways condition. So with 2 hours candlestick interval, I'm able to see how this pair is behaving, and what we can see, it's easy to understand that prices are moving horizontally with this was the first resistance level, then the second resistance level is this one, first support level, second support level, and with this one is working as a new resistance level to be broken, and this resistance level is 107. So going back to my technical analysis, first technical analysis interpretation, because there might be 2 different interpretations that I found, but both of them they might tell us to go long even if it is too risky. But let's see. First of all, let's go back to the first technical analysis interpretation, and this one is exactly what I mean. The prices are moving horizontally. We are at middle of this channel, exactly middle height of this channel, and the idea right now, based on the channel theory, is just to hold, because both options are still valid as it happened before for this bottom and this one bottom again. So it went down to this support level, and then it broke. It just broke the support level after a couple of months, well, just a month after. But anyway, what can happen exactly the same day, that the prices can really go down. But most likely, the prices will keep going up to this target price of 107, assuming that the bottom has already been touched once. So when generally the prices are closer to the bottom level, the idea is to go long, and this is, I think a lot of people went long at this point. I think it was good choice to go long there, even because the stochastic was telling us to go long, the stochastic was in oversold, and then the idea was to go long. In this situation, stochastic overbought, the idea was to go short. This is just how the channel theory works. Price is closer to the top resistance line, the idea is to go short. Price is closer to the bottom support line, the idea is to go long. Always checking with the stochastic, RSI or MACD. It's important to check with the use different tools. So this is my interpretation, current interpretation of this stock, where prices are moving inside the channel, and most likely the price will go up, but it's too risky for now. If you have not yet invested in this stock, in this pair, just hold for now. Let's see what's gonna happen the next days, because if this pair will keep going down, the idea is to hold, and as soon as the price will get closer to the support level, the idea is to go long again, or otherwise, if the price will keep going up and if the resistance level will not be broken, the idea is to go short. While if the resistance level will be broken, the idea is to go long up to a new let's say target price of almost 110 Japanese yen. But we need to check. This is too long. It's a long prediction. It's better to stay closer to us for the next days and weeks. Let's see what's gonna happen the next days. So the idea is to hold for now, but if you want to risk a little bit more, you can go long. While that interpretation, as we can notice, it's easy, again, kind of not very straightforward, but what we can notice now that if I'm gonna use this trend line, just give me a sec, going back to where I was before, and we are, this one can be seen as bearish trend line. And what does it mean? It means that the problem is that this it's not really is still forming the new rally, so that yes, this is the peak 1, peak 2. We need to find the third peak that can happen somewhere there. But if it is the situation of this bearish behavior, first of all, the idea is to hold, because if it's bearish, we don't want to go long. We would like to go down as per the major trend. So this is how the trend would look like. So if, and then the idea is that this one will go down like that. So this is an alternative interpretation. I think the first one most likely to happen, but both of them, they are telling that the prices they are going up to form this resist this to check again against this tentative trend line, so with the target price of 106.3 rather than 107. So both of them, they are telling us to, I mean, this one mainly to go long, waiting that these prices will touch, will test again this trend line. But again, I'm more confident with the first assumption. This one is too hazardous. I mean, too again, it's too risky. The prices are moving in a sideways channel. This is the most realistic situation. So even because this one is just a tentative trend line, because it has been tested only 2 times. So yeah, I would go back to the previous option. To me, is more seems to be more realistic. So this one, and then before investing into it, just please consult a different website, like perhaps this one, that is just telling us that the majority of the clients, they are just they are long. 57% of clients are long. And even if you go to another website like investing.com, this is they do some technical analysis based on hourly or minutes or daily, and then the idea coming from the technical analysis is to buy as well. They tell you which are the indicators that telling you to buy. So even much more complicated indicator than the one that I use, because generally I tend to use the easiest indicator that I know. Actually, I think the easiest is always the best. So just keep it easy, as easiest as possible, but please just don't use very complicated tools, because it's just technical analysis, and already technical analysis is not something that we are sure 100%. So just don't make it more complicated than it is. It's just simple price movements. Thanks for listening. That's all from my side. Thanks, bye.